Well, what we're seeing in Walmart is that they were having problems with their inventory. And so one of the things that we monitor is something called the cash conversion cycle that measures the days inventory outstanding, the days sales outstanding, and also the days payable outstanding. We started noticing that the days inventory outstanding was starting to increase for Walmart. And so since the beginning of the pandemic, going back to 2020, we've seen an increase in the cash conversion cycle, which means that the management of their cash started to slow down. A company that we own, Costco. Yeah.
Go ahead. Yep, that's where I was going. Go ahead.
Yeah. So Costco, for instance, if we go back to January of 2020, their cash conversion cycle actually has reduced since the beginning of the pandemic. They've become more efficient in managing their cash, that inventory. Also, what we're seeing is that on the sales side, customers are starting to look at taking longer to pay their credit bills. And so that's going to be impacting this measure also. So we really say that you want to focus on this cash conversion cycle to manage through this inventory, this inflationary environment.
Yeah, I'll tell you what, it's so interesting how fast things are changing for this business. If you take a look at the guide for earnings growth, forget revenues, just pure earnings growth, adjusted EPS for the fiscal full year down 10 to 12%. Their prior was for a decrease of 1%. That gives you
exactly
a real interesting look at the visibility is so poor for those retailers, Degas.
It is. And so you want to really focus on, as you just mentioned, what's the growth in earnings expectations? And as we see with Walmart that coming down, you want to be very aware. You want to focus on those companies that can increase earnings even in this environment.